is take profit levels or targets a good idea, or is it best just to set a stop loss, try and get it at break even as soon as possible, and then allowing the trade to run until the medium term sentiment for that pair deteriorates or changes? All of the above, I would say. But it depends on what type of trader you are. So that pretty much sums up the way that I normally go about it. Yeah, I like to incrementally add and remove risk from trades. Sometimes either starting with just 1 or 2 units. The most likely scenario starting with 3, and then trading that accordingly. Even though I normally don't set fixed hard targets, that doesn't mean that you shouldn't take profit at key levels, though, which is very important. So, traditionally speaking, in the traditional sense of things, you normally get, when you normally take a trade, or what most people have been taught is that let's say you have an entry and it's somewhere over here. You have your stop loss placed at one spot, and because you trade a one and done trade, i.e., you just you take 1 unit, and that, okay, based on that stop loss, I need to have a lot size of, let's say, let's hypothetically say it's 0.9 mini lots that you need to trade based on that stop loss, based on account size, etc., based on the risk you want to take. Let's just say that's your lot size, and you're taking 1 unit. The problem with that type of method, for me, and again, it's different for all traders, right? So you need to find one that works for you. But the problem that I have with this type of setup is that it gives me very limited flexibility in how I can manage that trade. Because if I've got the 1 unit running, I'm most likely, almost 100% guaranteed I'm going to reach levels to the upside if I'm buying, or to the downside if I'm selling, where the market's going to offer some support or resistance. So if you got it right and you entered at this spot and you trade it to the upside, what do you do when the market gets at 90-60? Do you take that full unit off? Or are you going to run the risk of are you going to take profit and then hopefully you get another entry? Or are you going to let it run and then you get to the next level and then you're like, okay, maybe I should take profit now, but I'm not sure, maybe I should just move my stop up and see how far I can go? And then it pushes lower, and maybe you cut the trade, or then it decides to push even higher. So it's a challenge if it's a one and done trade and you trade that way, because your own psychology is going to get in your way. At least that was how it was for me. The reason why I tried to find something else that worked for me, as opposed to the normal way of going about it, is because my personality doesn't work that way. I don't have the patience, firstly, and I don't have the risk profile to just let it run. I want to make sure that if I'm going to be right for 50 pips, I want to be able to make that count for something, right? Whether I'm right for 50 pips or 100 pips or 150 or 200 or 400, I want to make sure that on my way there, I'm making it worth my while. I'm making the analysis worth my while, if that makes sense. Because too often times, I would have taken a trade like this, then you're slamming into resistance and you hold on to it. Slamming into your resistance, you hold on to it. The next time you get to resistance, you're like, you know what? I don't want to sit through another move lower. I'm just going to take my profit. And then it slams through that level. So the reason why I do it this way, the reason why I keep profit targets, let's say open, is because I want to see how far it can stretch. But that doesn't mean that you shouldn't use key levels to the upside and just leave it running. At least that's not the way that I do it. So the way that I like to do it is split it up. But then as I reach those inevitable levels of resistance or inevitable levels of support, you can use those levels to take profit off the table, move your stop up to break even as soon as you can, and then see how far the market can carry you. So on this particular trade, we had that 1 unit. We took one off systematically, the other one's a little bit lower systematically, and then we took off the third one over here. But there wasn't any magic in these levels. They were just the next key resistance levels, right? So even though there wasn't a like one level that I was targeting for profit, all of these levels offered profit targets, if that makes sense. And then of course we got out of the trade, and then the markets flip-flopped around, and then we had that big break to the upside. So based on this method of mine, if I traded with 4 units, I might have been able to hit that level. But running 4 for me, 3 is just easy to work with, right? Somebody asked me the other day, why not 6? Why not 7 if your account allows it? It's just because that's a lot of, you need to manage a lot. For me, 3 is enough because you can always add more, right? Let's say you've taken off 2, breaking above that level, taking off 1 unit. I could probably have entered from that level with another one, but at that time, the conviction wasn't there, right? I waited for a deeper correction. Now that, of course, didn't happen. The markets broke out. Then eventually we got our pullback, and we managed this one the exact same way, right? Entering 3 units, took one off at key resistance, took one off when this resistance didn't, when it held, it pushed price lower. We held on to that 1 unit, and then the final one we took off at 70 or 90, 93.70. So even though entering from here, I didn't have a specific target level. Every single level to the upside is a target level if you think about it that way. So if you've got only 1 unit running though, the problem that you get is that everyone that you get might be the final profit target, and that's very difficult. So entering at this level, if you would have asked me where am I going to take off my final unit, I wouldn't have known that it was going to be here, because it depends on how the trade developed. The trade might not even have gotten to this level, right? We might have reached this level and we might have just pushed lower, and we might have been taken out of break even with that final unit. So there's so many things that can change, and the way that I like to trade this way, Dylan, is because I feel it provides me with the flexibility of moving in line with how the market is moving, and not having like something set in stone that, okay, I'm entering here, I'm going to take it off when we reach, that specific level. For me, it's just too restrictive. I like to be able to quickly get in and out of the markets, and it allows you to be more. I find that for myself, it allows me not to get too married to a position. So a good example was the euro sterling, where yesterday, if the markets had enough momentum to push through that level, I would have just let that trade go. I would just say, okay, cool, maybe timing isn't right, I'm going to wait for a better level and then re-enter. But if you've got a 1% risk at a level somewhere below here, or maybe below here, or below here, in a traditional sense, you've got one thing running, you're like, oh man, what should I do? There's just, I feel that sometimes the traditional way of trading makes traders they get too married to a position. Like it's a must thing. Like it's this, sacrilege thing that you need to follow through with type of thing. And for me, it's just, the flexibility is what I like about this approach. But having said that, Dylan, that doesn't mean that it's going to work for you, right? There's plenty of our subscribers who trade successfully, and they don't do it this way. They do it in the traditional way. They take 1 unit, they anchor their stop somewhere where they think they are wrong, and they let it run. They just let it run for as far as wide as it can, and they trade very successfully that way. And so the reason why I wanted to add that is that, I'm not going to say, you must do it this way. I do it this way, so you should do it that way. I know out of experience that the way that other people did it didn't work for me. I had to find a way that worked for me. So if you try it out, if it doesn't work for you, doesn't mean that you're doing it wrong. It might just mean that it's not a good fit for your personality, or maybe it's not a good fit for your available time that you have to trade. So make sure that whichever one you decide to use, that it's something that fits, that works for you, because it's definitely not a one size fits all.